Hello everyone, you've joined the webinar Pricing PPAs in Germany, Huge Geographical Variations. We'll just wait a couple more minutes for everyone to log in, so stay tuned. PPAs in Germany, Huge Geographical Variations. My name is Irina Peltegova. I'm a senior analyst of the renewable power markets at Vate, and I will be your host today. First, a few words about who we are. Vate is a world-leading provider of data-driven insights in the low-carbon markets. We cover renewable power, renewable fuels, and carbon markets with unparalleled breadth and depth, backed by expert, independent, objective research and analysis. Our team of analysts covers market developments on every continent, strengthening clients' decisions through real-time analytics and market intelligence. We deliver the insights you need to spot risks and opportunities and achieve your goals. If you want to know how Vate can support you, feel free to let us know in the comments so our team can reach out to you or simply visit vate.com. And now over to today's theme, pricing PPAs in Germany, huge geographical differences. As you know, PPAs are priced in a bilateral negotiation and the results are rarely made public. Settled prices will vary due to actual cost and value differences, but can also be influenced by asymmetries between buyers and sellers. So even ignoring the latter, it's surprising how much pricing elements such as capture cost and balancing cost can vary for different assets in different locations. So we'll focus on exactly these two pricing elements today. We'll present you with our view and approach when it comes to calculating these costs for offshore wind PPAs in Germany. And here with me today are my colleagues, Lisa Zafoschnig, who is our power market expert with extensive experience in long-term market analysis and PPA markets, and Ghali Yakoub, who is currently completing a PhD in forecasting wind power while working as a senior renewable power market analyst at Vate, focusing on forecasting the guarantees of origin prices as well as balancing costs. Before we start the presentation, just a few housekeeping rules. We will have a Q&A session at the end. Please use the Q&A functionality at the bottom, not the chat function. And please leave your name next to your question, just in case we run out of time and cannot answer your question, would like to email you a response. We will send the webinar recording as soon as we can, although we are not going to be sharing the slides. Okay, so moving on to the first slide. Yes, no, next one. Sorry about that, a quick glitch. Right. Firstly, I will start us off with a brief overview of the German PPA market and its most recent developments, followed by the status of the German onshore wind market in particular, and the various PPA pricing components that shape the final PPA price. Then Lisa will go into more detail on our approach when calculating capture costs, while Ghali will dive into the intricacies of calculating the balancing costs. And then we'll finish off with a brief conclusion and a Q&A session. Right. So last year was really a pivotal for the German PPA market, with a record total of almost 4 gigawatts worth of new PPAs reported. And this year, the market is actually expected to outperform last year's results, given that there is an increased corporate appetite for renewable electricity, a greater visibility on the German wholesale forward curve compared to other markets, among other factors. Nevertheless, solar and offshore wind have been dominating the German PPA market, with onshore wind PPAs representing just about 3% of the total contracted capacity last year, after a very strong 2022. However, if we dig deeper into the data, we see some signals that the German onshore wind market is actually yet to develop. So it's next slide. If you look at the graph on the left-hand side, It shows you the total contracted capacity by technology in the first quarter of 23 and 24 in Germany. As you can see, yes, last year so far, last quarter last year really outperforms this year, but this is because we had a handful of really large offshore wind PPAs that was signed last year. However, in terms of number of PPAs, so the graph on the right-hand side, we actually saw 12 announcements already in the first quarter this year with a far more balanced technology mix. So in particular, hybrid PPAs, so the purple line, comprising solar and onshore wind, appear to be on the rise, with 3 such deals already signed this year compared to 4 in total last year as a whole. And something important to note here is that many PPA announcements do not mention the exact installed capacity, especially for hybrid PPAs. That's why you don't see them on the left-hand side. We at Vate have our own methodology where we estimate the installed capacity whenever there is enough information available on expected annual production of a single technology, then the technology-specific load factors for the respective country. So what you see here on the graph on the left basically includes those calculations. This is just for you to know. Moving on, so looking at the German onshore wind market currently. So if you look at the map again on the left-hand side, an important development to keep an eye on in Germany is the gradual end of government subsidies for the older German generators. And looking on the map on the left-hand side, as I said, by the end of this year, over 12 gigawatts of onshore wind capacity will be operating on a merchant basis. And the number is going to grow to about 18.5 gigawatts in 2028. So that's on the map on the right. And as we're seeing kind of weaker and more volatile wholesale electricity prices combined with bearish guarantees of origin prices, this may push those installations to seek PPAs rather than hedge their production directly on the market. So as I mentioned before, onshore wind is really yet to develop its full potential as a preferred technology for signing PPAs. Here on this next slide, I'd just like to show you briefly how we at Vate derive the fair value PPA price from the base price, considering capture cost, which reflects the incurred cost from volatile generation, imbalance cost, which accounts for balancing differences in forecasted and realized generation, and the price of guarantees of origin. So the base price is the same for the bidding zone Germany. GOs come from our long-term model and are specific to technology and country. But the capture cost and the imbalance costs are dependent on location and technology. So these are the largest variables in the equation. And capture cost in particular is becoming an increasingly important pricing component as rapid renewables build out increases cannibalization and results in larger geographical differences in achieved prices. I'll hand over now to Lisa, who will tell you more about Vate's approach to calculating capture costs and what are the geographical differences when it comes to onshore winds in Germany. Over to you, Lisa.
Thank you, Irina. As you just saw, capture cost is already a very large part of pricing or assessing the fair value of a PPA, especially looking at a pay as produced or pay as forecasted structure, where we directly compare generation profile that an asset has. So I'm going to talk a bit more about what is this concept of capture cost and how do we see trends develop and how does that affect PPA pricing. I'll start off just with explaining what we mean by capture cost. I think a term that's a bit better known in the industry is maybe the capture price. So that's the volume weighted average price of generation, which is the mint line we see on the right for onshore wind in Germany historically. Another common term is maybe the capture rate, which is the ratio of the base price. So just the average electricity price that a base load generation or consumption profile would see. And what we're referring to when we say capture cost is the difference between this base price and the capture price of an asset or technology. With that, it considers the generation of an asset or technology and the power price in the connected bidding zone. We often talk about this term when we refer to renewables, but I think it's just important to also understand that this concept can be applied to any technology. And if we think of dispatchable or flexible technologies, let's say flexible hydro or thermal capacity, those assets can actually be dispatched also in hours of higher prices and often achieve what would be a negative capture cost. So higher capture prices than the base price. But when we're talking renewables, and specifically renewables with volatile generation profiles, so solar or onshore wind, where you're only producing if the sun is shining or the wind is blowing, you don't really have this option to choose when you produce. You'll have a production profile or power generation profile dependent on the resources available. And typically that means, especially in the system with a lot of renewables of a similar pattern, that you're going to have a lower capture price than the base price, so you're incurred a capture cost. I'm going to talk a bit more about how this differs for different locations in the country and how we see trends develop over time. But before that, I'll just give a brief idea of the basics, starting from, well, we're talking onshore wind in Germany. So we start with looking at the wind resources. If we look at the map on the left, so all of these maps we're showing are directly taken from our PPA portal, where you can browse through these different views. On the left, you can see average wind speeds historically, clear trend, a lot of wind in the north, not so much in the south, which I guess is well known to anyone operating in the market. What's also quite clear to be seen with these gray circles of existing onshore wind assets is that those are typically located where wind resources are good. So there's a lot of wind installations in the north, northwest, close to the coast, where you have the most favorable wind conditions. On the right, that's sort of translated into actual power generation or into a load factor. So the load factor being a measure of power generation per installed capacity. And again, in the areas with better wind resources, these are also the areas where you can produce more with your installed capacity. How we derive wind generation on an asset-specific level. I mean, you see nice heat maps now. That is all based on, as a starting point, weather data. And then from this reanalysis weather data of wind speeds at different vertical levels and other variables that help us to interpolate to relevant turbine hub heights, we apply turbine specifications. So that's locations, number of turbines, types of turbines, and then the associated power curve, which is the power output relative to the wind speed. So some examples shown on the chart in the middle. And then obviously an important factor is the hub height, just to get the correct wind speed at the right level. With that information, we can derive asset-specific power generation curves. So they're specific to the conditions at the location and specific to the installed technologies at a location. If it's a larger wind farm, we're accounting for wind farm wake losses as well. But that's just a bit about the methodology. And what I'm going to be talking about now is the effect of correlation of these power generation series across the country. This is going to become important once we look at exactly this capture cost component, because the more simultaneous generation you have, especially from renewables, once they're all fed into the grid, these are often the occurrences where you have low or zero or negative prices. So if you also are an asset that produces at that time, you're going to see on average quite low power prices. So your capture price is going to be low, your capture cost is going to be high. On the map to the left, we see correlation factors of assets located in these areas with the total country generation in Germany based on data from 2016 to 2023 on an hourly level. And no surprise there, the areas with a lot of installed wind capacity are also those that dominate feed-in of onshore wind generation. Those then see the highest correlation to the total country generation. And then there's some areas, especially in the south, with less installed capacity at the moment, where you see a lower correlation of the power generation from wind compared to the whole country. Just an example of that on the right as well, to visualize it on an hourly level, the yellow line being Germany. So that's a bit of a smoothened curve, includes all feed-in from all onshore wind assets as taken from NSOE. And then we have one asset, the blue one, that's quite nicely correlated. It has all the same peaks and valleys as the country as a whole, whereas another asset, asset B in this example, has quite a different generation pattern. And this becomes increasingly important in a system where we actually expect more and more renewables, and in this case specifically also onshore wind and offshore wind, to enter the market. We use a fundamental power market model to reflect the future developments in the power system. So we have assumptions on capacity build out, power demand, fuel prices, interconnectors, anything that's relevant to understanding the future power system. And what you see on the left is actually the generation mix and demand expectations for Germany. And we clearly see this trend. I mean, there's a lot of very ambitious targets about more build out of solar, build out of onshore wind and offshore wind, while at the same time planning to phase out coal and lignite and bringing more hydrogen-ready gas turbines to the market. With these expectations, we also, with our fundamental power market model, it also allows us to get really hourly prices up until the next years into the future, looking at 2035 now. And what we see is that, especially on the chart on the right, the trend for capture prices for all renewables is going down. So the mint line, onshore wind, our topic of today, we see is already lower than the base price, but this gap is just going to grow. So the capture cost is going to be growing over time. It's even more drastic for solar PV. There, the simultaneity of generation is obviously given by the fact that the sun only shines during the day, and it does that pretty much everywhere. So the capture cost is even higher in this regard. But I think we're often just confronted with this one curve. Okay, this is the capture price or the capture cost for the next few years. What I'm trying to illustrate here is that it's also important, especially if you go into valuing the valuation of a PPA, to understand some more granular patterns. That's seasonal patterns, that's geographical differences. So what the charts here show is at the bottom, base price and capture price, and at the top, that's the capture cost. So that's the difference between the white and the blue line at the bottom. But in addition, there's this confidence interval, which is the capture cost P5 to P95 of all assets in Germany that we have calculated power generation series for. And the first thing I want to highlight is that when we look at the bottom chart, base prices have a seasonal pattern. We have typically most of demand in the winter, so we see highest prices at that point in time, and then less or lower prices in summer. But we also have most wind generation in these months. So even though I say, okay, a lot of wind generation is correlated with low prices, that still holds true. But this gap between the hours in winter with high prices and the hours in winter with a lot of wind and lower prices is even higher. So you have high capture costs, and these also tend to increase over time, as does the seasonal pattern. So we clearly see the seasonal pattern strengthening as we move towards 2035. The other thing is the confidence interval. So talking about capture cost as of a discount of base price, of capture price to base price, but we do see that in some cases, in some months, certain assets have a negative capture cost. So they actually are not correlated to, or not as correlated to the rest of the country, and they can see sort of earn more than the base price on average. So just also think about the granular data more than just the one curve. But I'll get back to the one curve. It's always easy to digest, easy to look at. This is our expectation in this light mint green line for capture costs as a country average in Germany. As mentioned, expectation of increasing capture cost as cannibalization increases with more renewable build out. What we also see is that this spread between the lowest capture cost of an asset in Germany and the highest capture cost of an asset in Germany widens. So if you're already today seeing that you actually have a higher capture cost than the country average, it's likely that in a few years' time, that gap is just going to widen and you're going to be even worse off relatively seen than you were before. And that, I think, brings me to the map on the right, which shows this capture cost here as an example for a 3-year period regarding a pay-as-produced PPA. And we see again this trend of highest capture costs where there is a lot of wind, a lot of correlation to the existing feed-in. And that brings me to, well, what does that mean for PPAs overall? And this is the example that Irina showed before already, which is a 3-year pay-as-produced PPA starting next year with geos. And while, yes, on average, we might end up at 73 euros per megawatt hour, there's actually an up to 8.5 euros per megawatt hour difference possible in the capture cost. And that's, I mean, that's more than 10%. That's something you would want to be aware of if you're looking at signing a PPA with a specific asset, or if you are the asset owner or operator in a specific location. And that was basically only the capture cost component. There's also a lot of variation in the imbalance cost. And my colleague Ghali is going to be talking you through that part.
Awesome. Thanks, Lisa and Irina. That was very interesting and insightful. I'll start sharing. I guess you already see my face. Here's my chance, put it somewhere. Yes. Yeah, cool. I'm going to take you through the imbalance cost today and the approach or the methodology that we have adopted. But before that, we'll talk a little bit about the imbalance cost itself and the historical calculated or observed values. And then we will dive into the methodology and the projections that we have right now. Well, due to the intermittent nature of renewable energy, realized production will never match the forecast, which will result actually in an imbalanced position. As a consequence, this will result in financial implication depending on how accurate your forecast is. Sometimes the balance prices are the same, and in that case, your error does not cost you anything besides some TSO costs. But when the differences are large, the balancing cost increase as well. The general approach adopted in estimating the imbalance cost relies on the calculation of the differences between the ideal trading and the operational trading in different power markets, which we will dive into it in the next slide. The differences between ideal and operational trading actually what makes the balancing cost, as we will see. However, understanding and estimating the imbalance cost is pretty important as it directly affects the financial aspects of your contract, and which can basically erode your economic viability or the contract economic viability. In that matter, the imbalance cost over a period can be estimated by calculating 3 different elements. The first one is the day-ahead earnings, which is calculated based on the forecasted volumes and the day-ahead prices. The second, which is the balancing earning, is the operational earnings, which is calculated based on trading the differences between the realized and the forecasted volumes, where actually here we're assuming that the mismatched volumes are to be traded in the balancing market. The third one, which is the ideal trading, and what we mean by the ideal trading is if your realized generation is as equal as the forecasted one on the previous day. Yes, and here actually you can see that it's like, for example, the day ahead earning is the function of the forecasted volumes and the power prices and so on for the other components. At the end, if you want to estimate the imbalance cost over a specific period, let us say a month, then we have to divide this by the realized generation. To put this into perspective, like following the same approach, here the graph shows the monthly imbalance cost for wind onshore over Germany, as this is our main focus at the moment, Germany and wind onshore. Later on, we will dive into different technologies, hopefully after this stage of the product, and other countries as well. The graphs here shows the monthly imbalance cost for wind onshore over Germany and its 4 TSO zones. And following this approach, it is observable that there is a clear correlation between different zones and the country as a whole, which is mainly due to the fact of having similar power prices and imbalance prices across the whole country. Nevertheless, the magnitude are different, while the trend is quite similar, as we will see in the next slide. Also, it should be mentioned that the imbalance costs are correlated with power prices, as we witnessed in the last couple of years, as you actually can see here, the spikes or the change in the trend in 2022 and 2023. Also, to put that into numbers, on an average, we observed the imbalance cost for wind onshore in different TSOs varies between 1.3 to 1.9 euros per megawatt hour. However, for TSO zones with less wind capacities, namely the transit and Amprion, the spread is bigger, meaning they face higher variability. Moreover, all zones show a positive skewness, where the mean values are higher than the median, or the so-called the 50th percentile, which means in general that we have very few high values dragging the distribution to the right side. And the implication of having such a positive skewness lies into the interpretation of the statistical analysis of the data, where using the mean as a measure might be misleading because it does not accurately represent where most values in the data set lie. And median would be much more appropriate measure in such cases. Well, concerning the correlation that we talked about, it's observable that the TSO zones with high installed capacities, namely the 50 hertz and the TenneT, shows a high correlate or higher intercorrelation, and also over 70% and over 80% with the whole country, or with Germany as a whole country. And another point here, actually, I would like to mention before we jump into the forecasting methodology is the historical imbalance cost on a monthly basis relative to the power prices. In general, the relative cost is below or was below 5%, and the trend has been declining towards 2022, as we will see in the next slide, except for 2020, where we witnessed a change in the trend due to the pandemic associated with low demand in Germany. However, due to the crisis or the energy crisis in 2022, we observed another change in the trend upwards. And this actually can be seen better by decomposing the time series into its seasonal components. And here, actually, just to TenneT as an example, where you can see the trend or the trend component in decomposing the time series, that the trend has been declining, except for 2020, where it's changed its trend, and then declining towards 2022 again, And now we are in a phase of changing the trend again. Now, looking at the methodology that we have done to forecast the balancing or the imbalance cost. When looking into the future, all the components that you see here needs to be estimated on the highest temporal resolution possible. The methodology that we have adopted is a combination of a fundamental power modeling, statistical approaches, and machine learning. Starting with the fundamental power modeling, which predict the future market development based on our base scenario, what Lisa has already mentioned, and our assumptions or predictions about the fuel and carbon prices. This will provide us with hourly prices and forecasted generation on wind, which contribute directly to the calculating of the day-ahead earnings component. The second model, which is built upon the historical relationship between the forecasted volume and realized volumes for different TSO zones, and where we refer to as a generation model or GM. This model predicts the realized generation based on hourly forecast or daily forecast volumes, like based on the hourly or daily forecasted volumes acquired or the output of the fundamental power modeling. So basically, we take the fundamental power modeling output in terms of generating or in terms of the generation of wind, and we forecast what might be the realized based on the historical trends that we have acquired from ENSO-E. The third model, which focus actually on forecasting the imbalance price, and here there is something that I would like to mention, which will lead us to the next step, is basically it's pretty challenging to predict the imbalance prices based on the available information that we have on an hourly resolution for a very long time or for several years ahead. So it's very challenging. And to get over this, based on or drawing from the high correlation between daily power prices and imbalance prices, we are able to use a probabilistic machine learning algorithm to predict a distribution around the day or the imbalance price or daily imbalance prices. And then ingesting this into or ingesting the power prices that we get from the fundamental power modeling, we're able to predict the daily imbalance prices for the future. But that's actually can be a little bit misleading when calculating the imbalance cost, which basically leads us to the third model, to the fourth model, actually, if we start from the fundamental modeling, which leads us to the transforming these imbalance costs that we have based on daily resolution into hourly or sub-hourly. And to do that, we need another model, which is the transformer, which is actually built on the principle. It's a regression models that is built on the relationship between the imbalance cost, the historical imbalance cost calculated on daily resolution, and as an output is the hourly or sub-hourly imbalance costs. So here we can see the pipeline of the whole process, where we start with the output from the fundamental power modeling, feeding into the two, taking the forecasted volumes of wind from different TSOs and the whole country and the power prices, and feeding into the generation model to change or to predict what might be the realized generation and to predict the daily imbalance prices, which gives us actually the monthly imbalance cost based on daily resolution. And running this into the transformer, we will be able to get the monthly imbalance cost based on hourly or sub-hourly resolutions. As a result, we can see the projection toward 2035, And the imbalance cost for wind onshore over Germany and its 4 TSOs, in comparison to the historical calculated one, we can observe the following. Both mean and the median have been increasing, which is associated with a decrease in the positive skewness. Well, this can be interpreted as the follow. As more, where we can see actually more high frequent values are to come and to be more centered distributed. And this is also can be observed when looking at the relative imbalance cost, as we see actually in this slide, where regardless the fact that the power prices are projected to decrease, the relative and absolute imbalance costs are increasing. And here actually, same as we did on the historical imbalance costs, if we decompose the time series or the projected time series of monthly imbalance costs, we could see that the relative costs are showing an increasing trend throughout the forecast horizon, which is applicable actually to other zones as well. And the same example Irina and Lisa did, if we looking at or assessing the effect of the different imbalance costs on the PPA contract, let's say the business or the PAP, the produced, you can see the pay as produced for the period of 3 years, the imbalance costs can vary between 0.7 and 2 euros per megawatt hour, which will actually makes the contract price varying between 72 and 70 or 72.7 and 74 euros per megawatt hour. If we consider only the imbalance cost variations here. And by this, I hope that I kept the time. I will transfer it to Irina.
Thank you, Ghali and Lisa. I hope you can see me and the screen that I'm sharing. Can someone confirm? Hello? Can someone confirm that you're seeing my screen?
We can see your screen, but not your face at the moment. Just a nice light background.
I have no idea why that is, but I will continue anyway, and I hope that I will appear at some point. Thank you very much both for the very insightful presentations. I'm sure that everyone in the audience can now confidently walk into a PPA negotiation meeting and talk about balancing and capture costs. But if you still need to know more about it, then don't hesitate to schedule a call with Lisa and Ghali so they can show you our new PPA product. Just a quick note, whoever has raised their hand, please just type all your questions in the Q&A box. We'll try to answer them in a minute. I just want to finish us off with one final slide. Very last slide, just a very brief conclusion on my side. Again, you're already very familiar with the graph, or rather the illustration on the left-hand side, where we're showing you the exact potential differences between the capture cost and balancing costs for 3-year pay-as-produced PPA. But if you also look at the graph on the right-hand side, here we're showing you the PPA price spreads for other 10 years as well, again pay-as-produced. And as you may note, the spreads actually widen the longer the tenure is. So again, something to kind of just take away of as an image from our presentation today. So now we have a few more minutes where we can answer your questions. Keep posting them in the Q&A chat. We'll try to answer them all today. But as I mentioned, if we cannot, then we will try our best to email you back our answers as soon as possible. Now, let's start. We have one question. The 73. Sorry, the price 73.13. Is this the fair value for solar or wind? This is only for wind. So as we mentioned, we focus currently only on onshore wind, but hopefully we'll be expanding our modeling also to solar and other technologies in other countries. Next question is for Lisa. So Lisa, the weight bases the power price expectations on one scenario. So how often is this scenario actually updated, and does it reflect movements in the forward market?
Yeah, thank you, Irina. I think this might actually be a really good occasion to just give you a brief teaser of the platform as it is. I'll pull that up right away, and we'll then sort of show you that, yes, we do have the expectation, or we do base most of our modeling on fundamental power market modeling. So we have one scenario underlying that has all the assumptions on capacity build out and so on. But we are aware that there's a lot of movement in the market. So a modeled scenario that I modeled last week might not be sort of what's still the most recent or the most relevant numbers. Can I just confirm that you see the portal as it is now? Nice heat map view?
No, Lisa, we're still seeing the last, sorry, the last slide. If you try to reshare.
All right, then I'll just reshare that. But basically what I am about to show you is that we also have the possibility to actually cover future market prices. So what you see now, this is it. This is the portal. And what I can do now is to actually click on any, either that's a location or an asset. If I click on that, we'll get a lot of information that we've talked you through already in terms of this waterfall. And all of this is based on our modeling results, so our fundamental power market model. But you also have the option to say, well, instead of using our base case that's updated with fuel price assumption on a quarterly basis, can use the updated daily German-based future prices. And that will update the PPA fair value price accordingly. So you can come into the portal every day, see how the market moves and see how that would affect your PPA price. But if you want something a bit more sort of stable and more fundamentally based, you can use our model prices. We're also working on the option to allow for user input so that you can also provide your own price series, and that will then show on the chart here to the right where we see base price. We have one is our market to model, so that's from the market to our fundamental power market model, and then there's the market to market, which is actually taking today's forward prices. I hope that answers the question.
Yes, perfect. Thank you, Lisa. You still cannot see me. This is so strange. I have really no idea what happened there, but I will continue. So yeah, I am here, not just floating in the space. We have one question for Ghali now. What will happen if Germany splits into 4 bidding zones, and how this affect your balancing cost methodology? Ghali.
Yes. Sure if you see me or not. I'm just answering.
Yes, we can see you
here on the. So yeah, I'll yeah. Now I see myself finally. Well, that's a very critical question actually. It has been a talk for some time actually about this, but if that happens, I guess the whole methodology needs to be revised and maybe even changed actually, because now we will facing a different situations than what it was before. That's short answer.
Thank you, Ghali. Moving on, let's take another one for Lisa. So current future prices for the next years are mostly below your modeled base price and decreasing over the years. Do you see companies willing to pay your modeled fair price given the current price environment? We see a fairly low willingness to pay in the market.
So that goes back to basically what I just showed before, these two lines, one being our model prices and the other being futures prices. And we currently see that, yes, future price expectations are low. I think it's important to note what we're doing here is a fair value approach. So we're not considering any supply demand effects in the PPA market itself. We're just looking at sort of the power markets benchmarks. And for that, we have the possibility to use both sort of a more model-based approach and a more market-based approach. So I think if you want to see the market as a reference, you can choose the futures prices. You can look at that, track that over a certain period of time, and sort of build your price expectations based on that. But you'll still have to consider more sort of the intricacies of the PPA market in terms of supply and demand on top of that. So it might not be the final price you pay, but it's definitely going to be a robust reference with reference to the power market.
Thank you for this, Lisa. Okay, we have a few more minutes. Let's see. Let's take another question for Ghali. How do you consider intraday trading in calculating the resulting imbalance costs?
Yeah, well, actually, I just answered this one on the Q&As section here.
Did you type it already?
I already answered this. It was a question from one person actually, and yeah, well, for the audience, if they are not able to see the answer, right now the assumptions, as I mentioned, that we are considering the mismatch volumes to be traded in the balancing market. However, we do have plans actually for the future development to include the possibility of trading in intraday, or like entering with an intraday values and numbers.
Okay, perfect. Thank you, Ghali. Another one, I guess, for Lisa. Moving forward, do you expect more onshore wind to be built out in regions with lower capture cost?
So I think there's two important factors here. One is just the pure capture cost, which is a value of sort of euros per megawatt hour. But the other important part is this per megawatt hour. So yes, we might see lower capture costs in areas with little wind, but these are typically also the areas with lower total generation. So if you look at it from a total revenues perspective, there's still an imbalance between what you could earn in a location with low capture cost, but less favorable wind resources. I mean, there are already measures in place in the auctions for support schemes in Germany. This Referenzertragsmodell, a reference generation model to balance out the difference in exactly these effects. So far, we haven't really seen that to push a lot of development, in particular in southern Germany. There's a slight shift recently, but it's not really strong enough to counteract or like to shape a clear trend. So I would say, back to the question that Ghali got, if we were to have different bidding zones, investment signals would be a bit stronger to invest in, say, onshore wind or other renewables in the south. As it is, we still expect there to be quite a large expansion. I mean, to reach these targets, there's a lot of capacity to be built out, but the overall trend of more in the north, less in the south, I think will continue.
Thank you, Lisa. I think the next question, probably I can take it. Do you have the same pricing model for French PPAs? The short answer is not yet. As Ghali already mentioned, we started off with German onshore wind. We're hoping to expand the product into other technologies and countries such as France. So hopefully soon we'll be able to have a similar webinar focusing on the French market. Okay, a few more minutes. Let me see. I guess another one for Lisa. How do companies that enter into a PPA manage power price risk?
A very good question. Definitely also a topic for another big webinar in itself. Just to note, we also have a market risk page on our portal where we actually explore different outcomes of power price. So everything we've shown so far is basically assuming that we model a price or we take the futures prices, and that is how the market's going to be, right? And we're doing our best to create good models and to track the market, but everyone working with models knows there's no way of knowing the future. So there is a huge risk associated to both power prices, but also say capture prices, capture costs, imbalance costs, not actually ending up on exactly that curve that we're projecting. And so you would want to ideally not just have one line that comes out to one value as like 73.1, but you would want to have sort of a band of different outcome spaces for the power price. See, is that skewed in a certain way? Is there a clear sort of upside or downside? And just have a better informed view of what the risks associated to power prices are before settling on the one value.
Thank you, Lisa. Moving on, a couple more minutes. One for Ghali. What do you expect the 15-minute day-ahead prices will have in terms of impact on imbalance costs?
Yeah, I was about to answer this. Actually, I'm just trying to answer all the questions related to this topic. Let me try to find it. Well, in principle, yes, that will affect the imbalance price, but I would say like we need to like get into the data more. Like I can't really say an answer on top of my head.
Okay, that's all right. We can always get back via email. Just make sure that everyone signs up their names as well, please. I think, one more question we'll take. What are contracting parties doing to introduce flexibility, either storage on supply side or load shaping on demand side, to mitigate these risks? I guess, what I've kind of been reading and observing is that, yes, definitely storage is considered now, kind of really something that needs to develop a lot more in future. And for this reason, we also expect that we're going to start seeing more hybrid PPAs that include, let's say, onshore wind and storage, or solar and storage. So this is a trend for sure that we think we're going to start seeing, especially, as I mentioned in one of my slides, about all the generators that are exiting the support schemes and going into the market. For many of them, they will have to also consider, okay, how do I stay competitive on the market, given that maybe my generation technology is a bit older, maybe less efficient than the newest ones. So like when it comes to repowering of those assets, then for sure, I think battery is a significant consideration and important factor that, as I said, will continue to expand. I don't know if Lisa has any more views on that.
Yeah, I think it's also important to mention the different PPA contract structures that can come into play here, and that can offer a bit more of flexibility, either on the off-taker side to say, okay, instead of contracting a base load and say that this is always what I'm going to be consuming, you might opt for maybe a monthly base load, maybe even a pay as produced, and then manage more of that flexibility on the off-taker side, as you mentioned, with demand response or with load shaving on that side. So even the different contract structures within a PPA allow you to tailor a bit more to your own, how much flexibility you can actually give on the demand side as well.
Thank you, Lisa. I think we'll finish here for today. Thank you very much for joining and staying with us. I hope you enjoyed the presentations and the Q&A. As I mentioned earlier, we'll make sure we send out the recording of this presentation as soon as possible, and we'll also answer any unanswered questions separately via email. So yes, thank you very much. I hope you have a great day ahead, and see you soon. Bye.